It is time now to take a look at the week ahead in finance, and joining us, as he does every week, is Scott Phillips, Chief Investment Officer from Motley. Scott, good evening. The week kicks off with a guide to future employment growth. Any expectations from the ANZ's job advertisements?
Peter, good evening. It's going to be a really big week, and this one does kick us off because if and when we see any movement on rates, it's going to come down to how well the economy recovers or continues to recover, and jobs, of course, are a really key indicator of that. We are expecting a negative number on the consensus estimates. That's after a reasonably positive last few months. So to some degree, a bit of just coming back to the field. Hopefully not too bad, and then fingers crossed we might even get a positive number from that one.
Well, a searing spotlight on the Reserve Bank of Australia on Tuesday. Strong expectation rates will rise Tuesday or the following month. How will this impact, Scott, the cost of living and property prices?
Yeah, Peter, you're exactly right. It's a case of when, not if, and very probably on Tuesday, certainly the month after, if not then. And you're absolutely right. The impact on the economy is what the RBA has been worried about. But at the moment, they can't avoid doing something because the impact of doing nothing might actually be worse. We know prices are rising really quickly. And the open question, as you say, is property prices. The big four banks are all predicting prices to fall for property in 2023. Whether that gets brought forward to this year, maybe that's an even bet, given that it may be more than just the one rate rise if and when the RBA does go.
If it wasn't already a busy week, we also have the retail trade figures on Wednesday.
Yeah, this is the other side of the jobs numbers we started with, because we have to keep spending if the economy is going to keep growing. The RBA has a really tricky job. They want us to stop spending too much, but keep spending enough to keep the economy moving under its own steam. That is the challenge for interest rates. We are looking for a positive read on retail sales. We've had quite a strong series over the past few releases. This one should underline the confidence and the strength of the economy. All eyes will be on what the outlook is, though, because if we've seen any drop-off in that because of expected rate rises, that'll give the RBA a sense of how far it might be able to go or need to go, depending on how quickly we keep spending.
And quickly, before we say goodnight, how are we looking tomorrow when the market opens?
Not a pretty one, Pete, unfortunately. Friday night was a tough night on Wall Street. Their market really fell out of bed. At the moment, the Australian futures are looking for a decline of about 1.25%. If we do that, that's less than half of the US fall. That'd be a good result, believe it or not. We'll have to wait and see what the market has in store for us tomorrow.
Scott Phillips from Motley. As always, thanks for joining us on the Late News.
Thank you, Peter.